Far too many of you are struggling with just actually marking up a simple supply or demand zone. So we're going to go through 28 pairs today, marking up just the supply and demand zones until you really understand the simple process it takes to do this. Now we're going to work our way through these pairs, through the euro pairs, the pound pairs, the AUD pairs, New Zealand pairs, US dollar pairs, gold and silver. Okay, we'll work through all these charts to show you this simple process. So if you are watching, be prepared. It's going to be a long video. Make sure you've got your favorite beverage ready and some snacks, and we'll get into this video. So let's start on the EURUSD, and we're going to do this on a daily time frame. It's the most quickest and easiest time frame to use supply and demand on, and it's going to help you to master this. Now, you can look at taking your supply and demand even further by checking out the playlist within this channel. It goes through everything you need to know with supply and demand. I will leave that linked above now, okay, for you to go and watch after this video. So the most simplest way for us to do this is you need to understand structure in the market to be able to mark up your areas of supply and demand. And again, there is a playlist in this channel which goes through all of the market structure. And I'll leave that linked above now as well. So the first thing we're going to look at is current price. Okay, we can see where the market has been moving, but what we need to understand is where's our break of structure. So this is our break of structure to downside. We then create a new break of structure right here. Now forget about all the internal price action here. We're not worried about all these moves. Yes, there are some supply and demand zones there as well. Okay, but these are drop-based drop areas of supply and demand. Then we can mark off this low, and we can identify price hasn't come back. And then this is our previous high, which has been swept. We'll mark this off as a red line. So understanding this, structure has been bearish and we've just swept this high. What about our supply and demand zones? Well, to start with, we can add an area of supply from this mauve here. This is what we class as our origin zone. Now, price hasn't quite come back to that area. Now, price could come back. Okay, we've got a small imbalancing there. This isn't about imbalances, but again, there's a full playlist in this channel if you want to learn about imbalances. So what we're looking for is price to potentially go back into the supply. We did have a supply that we could draw here. Now you can see the market has come down, okay, broke out, pulled back into the supply, dropped away. We pulled back again into the supply, we dropped away. Okay, we pulled back deeper into the supply and we dropped away, and finally we've pushed through the high of the supply. Now when I see a sweep pushing up like this is taking all those orders out of the supply zone. Okay, we've removed that supply, but we haven't shifted in structure. Let me just remove these off. So what I mean by this, excuse me, what I mean by this is, let me just grab a drink. It's going to be a long video. So what I mean is we've removed this supply after sweeping it, but we can still see the market dropping down for this low from here. The reason is because we've taken orders above this high and above this high into an area of imbalance here. Now we could look for price to push higher into this final supply and then drop away. Okay, this is how we simply look to mark our areas of supply. Very simple way to do this. Now for demand, we have to go back to see where price broke. We broke out here to the upside. And let's mark this off as a structure. And if we go back in this move down, this is our last break to downside. Okay, this was our break to the upside. And again, we broke here to the upside. Now you understand why we use this break of structure technique, oops, put that out there, to find our supply and demand zones, because it's the most quickest way to do it. So looking at this, we can identify we had an area of demand here. Mark that out. We had an area of demand here. Okay, and Price continues up. We have another area of demand we could draw here. Price may have used this full sell to buy. That's where we bounced off. And eventually we have this area of demand here, where price did bounce off and went higher. So we look at these areas of supply and demand, understanding where the market is potentially going to bounce. Okay, well, we bounced off and we pulled back towards this area of supply, which is a drop-based drop area of supply. Okay, this is where the market pulls back into. So it is a drop-based drop. Okay, you can see we break internal structure. Now, I didn't want to go into this too much depth in this video, but these are the origin zones. These are internal drop-based drop zones. And you can see these will work as well. Okay, and again, understanding the difference between the two is very important. Now, if you want to learn this in more depth, okay, as well as what we're going through in today's video, the Profit per Trade workshop will cover all of this in more depth, understanding the difference between a tested, okay, and a fresh zone, and what these zones are doing. So as we see price continue to push down, what we're just looking for, again, that we can see that price has even run this supply as well. We're now looking for the market to continue the bearish mode for this low. Now, this could be a push up into the supply, one more sweep above these highs and a fall, or we could just see a fall from this area in the market. What we're looking for then is a new supply to be created. So you look for that fall away to break this structure, pull back to supply, and that's where we look to sell the market. Just understand the difference between the origin and what these drop-based drop zones are doing. So that's the EURUSD. Okay, we can identify we've bounced off demand as we continue to go lower. Now, never remove your zones until they're being taken. Now, you don't need all these zones on the chart. You only need the closest zones. We can see price held at those areas, and this is the last one we bounced off. This got removed. You don't need it. Okay, this one has not been tested. So all you need is those two zones on your chart. That's all you need to be using. Okay, so let's now go over to the next pair. And we're going to go over now to the Euro Japanese yen. Again, we'll do this through on a daily time frame. So we look at this chart. Where's our last breaker structure? It was this level here to the upside. Let's go in closer to price. Before this, we had another breaker structure here. So if we're marking up areas of demand, there is our area of demand. Very quick, very easy to do. And look, there would have been a nice entry off demand. Okay, and we push up for this high. We drop down, we break out. Now the origin demand zone you could use would be this area here. Now you can see that price reacts, okay, from that demand, pushes up, lower high, and we break. This is, understanding, this is our drop-based drop zone again. It does leave an area here of supply that we could use in the future. But the origin zone is going to be from this buy to sell move up here. Okay, so that's the quickest way to do it. Now we've removed this area of demand. Okay, this one got removed. And we go back to find the nearest demand. And the easiest way for us to do is to look down to the left. I'm going to mark up these structures so you can see how we look at it. So we continue to push this structure down. Okay, nice and simple to do. And the final one, we've got to drop down. Okay, so let's have a look at this breakup. So we have got an area of demand. We use this area of demand here. We can see we bounced off this demand zone. Okay, where we had a bounce off. Okay, so this is a internal reversal down here, broke structure, pull back, continuation, and you can see the market actually even pushed below this low. So that was our last demand. We bounced off. This is our main origin area of supply. Okay, we have some drop-based drop zones there as well. This is our last area of supply. You could even use this candle actually. This is our indecision candle, which creates that zone. And that's all you got to do. So we can now identify from this push to downside where structure is. Okay, so we had a break of structure. We actually had a small break there as well. So we go closer in, you'll be able to see the zone where we broke out and we had an area of demand. So the area of demand here is what got removed and created a supply. So if you always remember, an area of demand being removed will create an area of supply. That's all you need to understand. So this is a structure break against the downside. The market drops, pulls back, and we make this structure break. And you can see how the market drops, pulls back again, and we make this structure break. And I'll just remove this zone for a second. This is why we use these structure breaks, to identify very quickly our zones. So there's a zone of supply. There's a zone of supply. Excuse the noise. Got some big lorries and that going past. We then have a drop-based drop area of supply here. Now I call them a drop-based drop because you can see they're quite a quick drop in the market compared to these swinging pullbacks, but it's still structure break to the downside. You can see that price didn't come back yet to this zone. We did come back to this zone. Okay, dropped off, pulled back, and we haven't yet come back to this zone. So we have a bearish bias there, bouncing off demand. So you can see how simple it is of a process. Once you understand marking up your structure points, you can then easily identify your supply and demand zones. So that is what we're looking at on the Euro Japanese yen on the daily time frame. We're in a bearish movement. We've bounced off demand and we're looking for potential pullback to supply. Now, if the market from here is to continue bearish, okay, from this point, we run the low again here. What's that going to create? It's going to create this area of supply. So we'll have a continuation to downside with a new area of supply. And what that means is price is actually respecting these areas of imbalances. Even this area here was respected on that small wick up into that imbalance. Now, imbalances is a completely different story. And what we may do, if you're enjoying this video, then drop me a comment down below. Let me know you'd like to see another type of video like this, but this time going through how we look at imbalances on all the pairs. So let's now go over to the next pair. And we're going to look at now is the EURAUD. And again, we do the same thing. Let's look at current price. We can see where price is broken up. We had a rally, pull back, rally higher, pull back. So this is going to be the last breakout. And then looking down here, I don't have any breakout until here somewhere. So at an area of demand, okay, we're just going to use this last bullish candle on this occasion. And you see price is broken up, pull back into demand. For an area of supply, we look to the left. Now you can see we've just wicked through this high. Here, that is a sweep in the market. So the market has swept through this previous area of supply. So we need to look even further back. If we look back here, we'll see we have a break of structure here where we can draw our area of supply. So this would be our supply zone. And I'm going to do here, I'm just going to take this to the right and extend it to the right, nice and quick. And we'll see where price is. So you can see we've just swept through that high into that supply. So that's where price is reacted from this supply zone. So that's all you really need is those two zones. We are currently bullish with this move up. But now you can see we've just reacted off this supply pull back into demand. And the next demand zone we've got is going to be down here somewhere. Okay, so the area of demand, let's change that, is down here. And we have some rally-based rally areas of demand. Okay, even this was a sweep. Okay, to take that low. Now, if you're not sure where this is sweeping into, it's sweeping into that imbalance. So again, we're bullish, okay, currently on this pair, but if we push through this demand, that's going to reverse prices off this area of supply. And remember, if we push through this demand, it creates what? A new supply, which will be up here. And this would give us a new area of supply that we draw right here in the market. okay, where we could then look for the market if we push down, removing this area of demand, pull back to supply for the next move lower. So that is looking at the EURAUD. Now, if we just zoom out quickly on that chart, you can identify the larger swings. We can see the market has dropped down, continued lower, okay, and then we start the pullback to this area. So if we looked at a higher time frame image, like you're going to see a larger weekly swings. So that is the current zones we're looking at on the EURAUD. Let's now have a look at the next pair, and that is going to be Euro New Zealand. Okay, so very, very simple. Now, one thing I like to just say as well, if you cluster all your pairs together like this, so all your euro pairs, your pound pairs, it helps you to see the strength and the weakness of them. And what I mean is, if we just quickly go back to the euro, we can see that we've swept this area, okay, of previous supply, and we've bounced off this area of demand with structure. Now, internally, we have an area of demand down here as well. Now, that means potentially we could see a push lower. Now, we go to the euro. Where are we at the moment? We are pulling back, okay, in a bearish trend, looking for something to push lower. And we could come out of this area of imbalance, so looking bearish. The EURAUD has just reacted off an area of supply, was bearish, holding at demand. So we could see another push higher, but if the market pushes through this area of demand, then we're going to be in a bearish bias. So let's now go back to the Euro New Zealand. So looking at this Euro New Zealand, again, let's just go closer into price. What do we have right here? We have a sweep in the market. Okay, so that's a sweep of this high. Where do you think this sweep is pushing up into? Into an area, okay, of, and again, we can see this area of supply was removed with a sweep as well. We then look for our previous area. Okay, so we want to be above. Let me just mark this out. Zoom in. Let's look for area of supply. So very, very spiky price action here. So there's a sweep there. Again, was probably to the left. That'll be off an area of supply. So we had a break of structure there to the upside, a sweep. So true break of structure is this low to be pushed through. That means we'll be looking at this as our last, okay, area of supply. So what I'm going to do, let's just put that to the right. Extend to the right, and we'll go back and we'll see where that's swept. Okay, look at that, swept off that high into that area of supply. Now we could probably fine tune that zone on a drop-based drop zone. What I mean is, if we went back to this area, once again, you can see well, we have price pushing down, pull back, pushing lower, pull back. So again, that we could mark off this last candle as an area of supply on a drop-based drop. And we've just held at that zone. So you've broken back. Now, if we're looking for nearest area of demand, the easiest way for us to do this, look at current price. Now, we didn't break structure there, so there's no demand I'm going to look at using there. So we look down to the left. We do have an area of demand that I could mark here as a rally base rally. Okay, so that's a rally base rally area of demand. But we're looking for that origin. Let me just grab my other tool. So we do have a, let me just show you this, a break of structure to the downside. And then the market has to go back above this high to reverse structure. So there's our break back higher. So what does that leave us? That leaves a new area here of, okay, demand. Now we do have some rally-based rally zones as well. So you could even look at this as a break of structure on the one candle, because we have a high and a low created, which will then give us a new demand that we could draw. To also use the full candle because it's an indecision candle. So we could even see the market want to push through, okay, the low of this candle here to make a sweep into this demand. But what are we doing right now? We are sweeping a high into supply. If we push through this demand, what's that going to do? I push through this area, it's going to pull back to new supply created here to run lower. So again, like the other pairs, potential bearish. So what does that mean right now? Well, that could mean that we're seeing strength on the euro starting to die out when we start seeing these sweeps, and potential weaknesses coming in. And we're going to see these cross pairs pushing prices lower. Now, what you need to do, cross-reference those against the other pairs. And what I mean by this is we look at the other pairs, which would be the pound, the US dollar, the AUD, New Zealand. Okay, you look at all those and you see which is the strongest to put against the weakness of the euro. So if we're seeing weakness coming in across the board on the euro, we look for the strongest currency and we will trade that single currency pair. This is how you find the highest probability trades, okay, with supply and demand. So we can identify a potential bearish we could be, but we could also see a bounce off this demand. Next one, we go to the Euro Great British Pound. So again, what do? We look for our current areas of supply and demand. So there is a current drop here to downside. That's a break. That means we had here an area of supply. What happens when a supply gets removed? A new demand is created. So the market breaks out, pushes out. So our area of demand would be here. But we can easily identify that the market is bouncing out of demand. Okay, new demand. Okay, we bounced out of that demand. Just show you what I mean. This is the origin, but we're seeing price bouncing out of demand on each occasion. And then we have this as our last demand zone. So this is the one where price is likely to pull back to. Now we could potentially sweep it into lower zones, but that's where we see the strength at the moment on the euro. Now, when we see moves like this, very often they can get reversed as a V pattern, or we can see these imbalances holding price. So what about our area of supply? Well, we can identify structure. We broke down here, market, and we just grab another one. And this is going to be our last break to the upside. We broke down lower. So we had an area of supply that we draw there. Did that supply hold? Well, if we mark off that bullish candle right there, zoom in so you can see that better. This is my candle marked. We just about tagged it nearly on that candle. I'm not sure if we did or not. We may come into this area of imbalance, even this candle. But look, we removed it. What removes it is this demand at the same time. The next supply zone is going to be off this candle here. Now we've already tested it internally and we come back. So we pushed through this high, creating what? Yep, a sweep into supply. Potentially we could see price from here running lower, even removing these demand zones with a new push lower. Now for price to push through this area, we need to see these imbalances holding price and then we push through. So what you can see is a imbalance hold, then we push through, pull back to new areas of demand and we continue higher. But currently we're just bouncing off a supply. Again, we're seeing weakness on that euro even against the pound. That's how I quickly go through marking up those charts. Okay, we've now gone through, I believe, there's one more pair on the euro. It's the euro Swiss franc. Let's just go over to the euro Swiss franc. And again, let's do the same thing. We can identify quickly this is in a bearish trend, but if we look at this last push up here, and then we have to reverse structure by taking out this low. And again, these are swings in the market. And again, like I said, if you're not sure about market structure, there is that full playlist in this channel. This then means that we have this last low price may want to run to next. So what about our supply and demand? Okay, so we have an area of supply that we can mark up here. And then we have another area of supply. Well, we can look at these full buy to sell moves like this. A buy to sell move, buy to sell move. Now, sometimes we can even find that these buy to sell moves are very large and price won't always come back to the origin zone. It comes back within the larger zone. So here we have internal drop-based drop zones as well, like these. They could even hold price as we pull back in and push price lower. But more than likely, we're going to see an imbalance is going to push price lower from here, or we're going to see price come all the way back up to the origin area, and then we see a drop. Now we can identify price never came back to this supply previously. And if we just look at where price did come to, okay, we came into this drop, base, drop right here. Okay, drop, base, drop. That was the supply where price held. That's how you understand the zones. So what about demand? Did we bounce off demand here? What we can see straight away is that we swept the low. Okay, and then if we go back in time, do we go back far enough? Don't think we can. Not going to find any price there to bounce off. So at the moment, we're just following that price lower. So we are bearish. We're weak against the Swiss franc. Now, Swiss franc has been very strong lately anyway. So if we look at this, we're in an area of imbalance. We're looking for continuation lower. Okay, so if we run this low, we'll create a new area of supply. A run of structure will create a new supply or demand. A removal of a supply or demand zone will create the opposing zone. Okay, so understanding this. So this video is really just to demonstrate to you how easy it is to mark up those zones and just find them on your price charts. When it comes to the entries and what we're looking for, I do suggest going through those playlists on the channel because that's going to help you much more. So that's the euro. Looking potentially, the euro is looking weak across those pairs. So if we now look at the next pair, we've got the pound. So we're now going to go over to the pound currency now. Now, very likely we're going to see the pound normally in the same conjunction with the euro. We're seeing the same direction, but just lately we haven't seen them being in tandem together. They've been kind of the opposite. Where we've been seeing euro becoming weak, we've seen pound becoming strong. And that can all be due to what's happening across the world, you know, in the economy and things like that. But let's look at just these supply and demand zones again. What do we look for? We look for the break of structure. Well, we have the market breaking this high. That's a break of structure. Again, let me just duplicate that line. We have another break of structure there. So we rally up, pull back, rally up. We have a pull back again. Do we have a break of structure on that high? We do. So let's go closer into just this current price. Once we see that, we have a shift in structure to downside. So what does that create, that shift? That creates this area of supply. Okay, so area of supply. We had an area of demand here we could draw. Where did price bounce off? Okay, we bounced off that demand. Then we pushed through. See how price reacts even to these zones, and then we push through it. What removes it would be an area of supply. What is this small area here? This is an area of a drop-based drop supply. Okay, this is our origin, this is our drop-based drop. Where did price drop through? Pull straight back to the supply, and we dropped lower again. We'll use this zone. We can mark this out. There's our current demand. And where's price now bouncing from? Demand. So you can see how simple this is to recognize these zones. So we do have a break through this low, okay, drop base drop again. So again, you could use this as a drop base drop zone of supply. So where's price sitting in? We're sandwiched at the minute between demand and supply. Where has price been going? Well, price has been quite bullish with our runs. Our order flow has been quite bullish. You can see these are more retracements. Price is retracing. Okay, retracement. Even this is a retracement. Why do I say this is a retracement? Because there's no imbalance down here. Look, one red candle from this high. On the way down, do you see any more red candles? No. On the way up, lots of blue candles. This could potentially mean this demand holds. We push through these areas of these drop-based drops, new demand, and we continue higher. That is something potentially that could happen. What does that mean? Well, currently we're in between bouncing off a demand, pushing back into supply. but this looks like a promising area for a bullish move. So this means we could see the pound being strong, but we'll have to go through the other cross pairs now to see if that actually concludes with that. Do we see the pound being strong against the other pairs like the Japanese yen, Swiss franc, AUD, the New Zealand? This is how we use this. Now, if we look to the left, where did this bounce off? Well, we had this swing high. Okay, we swept through that high. I'm not going to draw it, but then we had a break of structure here. What do we have here? Okay, let's mark it out. Last area of origin supply. Where did price push from? So what does that tell you? On a larger scale, a larger time frame, where you can see a break structure down in a larger pullback, we come off supply. Potentially we could break through this demand, continue down, then pull all the way back to supply here, where we have that small imbalance left over, look for a sell to run lower. So that is something long term that we could see happening. So a push through this demand would then signal this shift in structure on the daily to look for that pullback. So let's now go over to the next pair in the pound, and that will be the pound Japanese yen. I'm just going to grab a quick sip of my drink. Otherwise I might lose my voice halfway through. Now, if you're enjoying this video, then do make sure you give me a thumbs up. It's going to help the video. Okay, and obviously, like I said, if you want to see more of these types of videos in the channel, then drop me a comment. Let me know, because I don't know if it's something you want to see more of unless you actually tell me. So on that pound Japanese yen, and again, where's our last structure break? Let's go from this high. Where do we break out? We may have just broken out there. Let's just go in and have a closer look. So let's check the high. The high is 200,561. The close is 205. No, we didn't. It's only a 206.08, where this high was, double check, a 561, and a close. Oh, it was a break. Yes, sorry. Grab that line, put that back. So there's a break structure there. So that's then a swing high, our next break structure. So based on that, this becomes an area of demand. Price bounces back out of it internally, and we push higher. So we can see the market pushes down, breaks out. We push all the way up here, and we do have a swing low here and a swing high here. So that's a valid break. So off this swing low is a valid reversal of structure. So here we had an area of demand that we would have had in the market. We pushed through the demand and we hold, we wick through it, but we hold and then we push through the bearish candle. Remember, what creates is an area of supply. So there's your drop-based drop area of supply, which removes that area of demand. And this is the main origin zone of supply that we have drawn. Okay, this is a drop-based drop, broke through the low. Now after this, we can mark out this as a next breakout. So we then have a new origin zone we can mark here. Now candles like this, I'd rather just mark the full zone of that actual bullish candle. And again, I will duplicate that. We have another break of structure, and we'll use this as a candle. So you can see where our supply zones. This is where we obviously broke through. Okay, we don't need that. And the market continues to be bearish until this low. So currently, this is, I want that there. This is our weak low in the market. We want to see price continue to run down. This is our current supply. Then we have all this imbalance here. We look to the left. Okay, there's our low. There's our break of structure. Let's bring that down here. There's a break of structure here. What does that mean? That means we have an area of demand that we could mark out here. Where's price bouncing from? Demand. So we can see that the pound has brought in some strength off this demand, but we could see a run lower to break through the demand. And that would create a new area of supply here. So looking at this chart, been very bearish. And that does mean some strong runs here to downside will be some strong trends on the 4 hour, the 1 hour time frame. That's where you can start looking and capitalizing on this and making some profits on those lower time frames, because those smaller trends are going to create supply and demand zones where you can look to take your trades going with the higher time frame. So the pound, Japanese yen bouncing off demand, but in a bearish bias, looking for pullback to imbalance or supply. Let's go to the next pair in this one. That's going to be the pound Swiss franc. So the pound Swiss franc is normally the opposite to what we see when we're looking at the Euro Great British Pound, but that's not always been the case lately either. So again, let's look at the structure. We have a structure break here to the upside. That created this area of demand. Let's zoom into price. So again, look, we have either this small area here we can mark as demand, doesn't matter. We can use the full sell to buy move there. So what happens when price comes back? We bounce off the demand, small bounce, we hold at this imbalance, and then we break lower and we remove this area. When we do that, we have our origin zone, okay? Again, this is our last buy to sell move of supply. Now, if you didn't mark out the full zone and just the small candle at the top, price never comes back to it. But we're looking at price filling this imbalance. Look where it comes to. Okay. Okay, so what we can now look at is the market bouncing out that supply. Okay, we remove this. We did have a drop-based drop. You can see why these drop-based drop zones are not always the best. You can see that we run straight through that to the upside. So when we look at our structure, okay, this was then, let's say we're looking at maybe in this low. Let's look at this low as our break of structure. Okay, that's our origin supply. So once we see another break of structure here, and this would then become our last area of supply. And again, you could have this a drop-based drop zone of supply. Price pushes all the way down. We've made the same thing on the other pairs, haven't we? What's the guess to the left? We perhaps swept this low at something and gone into demand. So let's look to this area. Okay, we can see here, this is a break of structure. Origin zone of demand is right there. What did price just bounce out of? Are you starting to see a pattern? Okay, this is just to show you how we draw up our areas of supply and demand going through all these pairs. But you're starting to see a pattern arising here, how all the pound pairs are bouncing out of demand. All the euro pairs have been bouncing out of supply. So this tells you a story, okay, of price and the strength and weakness of a single currency. Now we could still see price holding at this imbalance, let's say, and runs lower, removing this demand, pulls back to new supply here, continues lower. Absolutely, that could happen. And that is a bearish trend we're in at the moment. But at this area, we are bullish coming off demand. So that is the pound Swiss franc. Look how easy and quickly you can just go through any time frame finding these areas. And at some point, you will find a good trade setup doing this. If we go to the next pair, is the pound AUD. And again, look, big sweep of the high here. But let's have a look at price. Sweep, and this would be a break of structure, and this low to sweep. So this is our last break of structure to the upside, which means we have an area of demand right here that we can mark out. So we haven't bounced off this origin demand like we saw in other pairs, but look what we do have here is a rally-based rally demand. Okay, rally-based rally breakout. Order flow bullish, bullish, pulls back into demand. And the other pairs we saw bouncing out of demand. Now if we look back, we have a swing high. Yep, we have a sweep. And we mark this out as a sweep. We look further back in time. Do we see anything? Okay, so we've got an area here. And again, we don't have a lot here. we have a break of structure here to the upside, a sweep and then reversal. That means this coming off this low where we're breaking down. So we have a couple zones. One, you have a zone here you can mark out as a supply. I'll mark that off to extend to the right. That is more of a drop-based drop zone. And then you have this final high that we can mark out, probably this full zone like this bullish candle. So we now just go back to current price. And you can see that this zone got wicked through as well into this larger zone. So zoom out, you can see this was the drop-based drop. We may have another drop-based drop there as well, but that's what we're seeing. So again, this time we're seeing the strength. Okay, we're sitting in demand, but we're seeing price coming out of a higher time frame area, potentially of supply. So on a weekly, perhaps as a weekly area of supply. So let's go back into price. So what do we have? We have price sitting at demand. So until we actually run through this demand zone, we're still bullish on a bias. So we can mark off this as high, as our weak high. But again, look, we can still see price from here running higher at this demand to run back through that high. But look at the size of that wick on that candle and then the follow through with the bearish candle. It's looking more like we're going to continue lower to the next demand, and we could even reverse structure. So the pound Audi, again, look, we're seeing potential weakness at the moment on the pound and some strength on the Audi. And you'll see this on the Audi pairs later, when you'll see the Audi pairs are gaining strength. And this is how you can read those currencies to help you to find the best pairs to trade. So let's go to the next pair. Pound New Zealand. So we've been doing this video for some time. Hopefully you're still hanging around watching this. If you are, then give me one word in the comments, and that is hell yeah, I'm still here, basically. So if you are still here, then I do appreciate it. And it's going to help you to understand the way you look at supply and demand. It's going to help you to read the markets better. It's going to help you to see the way I use currencies for strength and weakness as well. So again, if we look at the last point, we could say this is a break of structure. The fact that it's made one candle high and low, it's a higher low. So no, I wouldn't use that as a break of structure personally. So let's look down here. We have a break to downside. This high has to be broken to the upside. So that's a break of structure. That leaves, okay, we have this small area of demand we can draw here, where price is obviously held price as we've gone through. And then you could even use the next area here as more demand. And you can see price continues to push off demand. If we now look at where this is pushed off from, okay, so we push through this high. Can we see back in time? We have this swing high. And yes, we can mark out this swing high as a sweep. Okay, so what are we sweeping into? Again, what are we going to sweep into? Area of supply. So this is going to be our area of supply. And again, we'll mark this out as a supply and put it to the right. And then we'll go back. And you'll see where we've gone deeper into that zone. Okay, pushed through this high again, and then we've fallen away. This is how we use supply and demand. Now you could say we've got this rally-based rally area demand, and you could use this as a demand zone as a rally-based rally, but they're not the best zones to trade from. And you'll see why. If we look at this, we had a reaction off it, and it's brought in the market to the upside. So it's bringing in those buyers off this demand zone. Price is held at these imbalances, full fill of imbalance, and we've dropped through to remove this area of demand. So all this demand was doing was pushing price higher to fill these imbalances and then pushing price lower. And again, what removes a demand zone is a supply. So what we have here is an area of a drop-based drop supply. Okay, I'm not really going through these too much. I want to really go through the origin zones, but it is a valid zone. So we could see price from here putting back in to fill these imbalances and a drop out of supply. Now for demand, your next actual rally-based rally demand is going to be this move here, which where price may pull back into, mark it as a demand, into this supply here to pull back to demand. Long term, we've come out of this area of supply, but we are looking quite bullish with this move up. So we could see a pullback to these areas of demand, this structure point even, and then a rally higher. But we'll have to see how price reacts. At the moment, the order flow is bearish. Okay, was bullish, but it's reversed to bearish. So we go with the order flow. So pull back into this supply will be continuation lower towards demand. So that's the pound New Zealand. Let's look at the next pair. And that is going to be the Audi US dollar. So let's look at seeing what we have with Audi. So the Audi US dollar, we had a shift up. Okay, so this is a break of structure there. The market then made a small breakout right there. And again, a break lower. So we had a shift in structure. What do we have? Well, we could mark out this as our area of supply. Very quickly, the market drops down with lower highs. Okay, so there's no real area of supply I draw here anyway, even a drop-based drop. We swept this low. Okay, what are we sweeping into? Remember, we're always sweeping into a demand. So looking left, there is our demand. Okay, we have a demand right here. Look how easy this is to identify your zones. And look at the move away from that demand after we swept that low. Now there's some strength coming in there. This big wick. We just saw that on the pound Audi, the strength coming in to sell the market. So the strength in the Audi was there for some time. Now we could see a continuation up, or we could see a push lower again. We do have a bearish bias, understanding that we've broken this structure back to downside. Now, we don't really have any drop-based drop zones except for this area, which we didn't like, which has been removed. So we look for market to pull back, continue higher, potentially up to this area of supply. Long term, we potentially could go lower. Looking at the larger swings here, we may want to run for this low at some point. So that is the Audi US dollar. Potential strength bouncing off demand. Let's look at the next pair we've got there, which is the Audi Japanese yen. So the Audi Japanese yen, okay, so let's look at this again, very similar. We can do the same thing once more. So we have a break of this high of structure. We rally up. I don't see any higher lows. Zoom into the last area of price. It's always important to zoom in. Okay, so we have a higher low, high. Let's just check this low. So we have a low of 25.2, a low of 24.2. So that is a valid break of structure there for me. What does that mean? It's a demand zone, but it's a bullish candle. So it's not the best zones. Okay, so it's run straight through. The market pushes up. We don't actually have another zone I draw. So I just look at that as a potential shift in structure. What that creates is an area here of supply. And again, look, we have a full move of supply from this low to there. So you could even see this as a full zone of supply at some point. Okay, or you could use this last single candle. But we have an area of imbalance. At some point, price may want to come there. Now, as we continue down here, let's just grab this line. We have another break of structure, and that creates a new area of supply. Let's just make that a supply zone. And again, we'll change that to a supply because that is actually a demand. Okay, so we can see price continues lower. And we'll use this level again. So we have another break of structure. What does that create? That creates a new supply. So we have supply in control. The market then gets to this low. What is it doing? Let's have a look back. Did we sweep a low? Yes, we did. This low here got swept for liquidity, just got swept. And guess what it's sweeping into? We go into price. What do we look for? We look for that structure. So we have a structure high broken there. Then we can move that up. We have another structure high broken. and then eventually we have another structure high. Okay, breakout there. So we can look at this as areas of demand, bouncing off demand. We have an area of demand here, and again, okay, we have a push up, and then we have this low, which creates the break here. So you could have this area of demand. And then what we do, we'll just send that off to the right, and let's see if we actually just pass into that demand. Okay, so we just touched it. Look at that, to the pip, we touched that demand. That's how accurate this can be for you. And we're now bouncing off demand. See, again, look, strength coming into the Audi as we see that pushing higher. And that's how you just quickly look for the supply and demand zones, for the directional bias, okay, even, and looking for the strength and weakness with those currencies. So we now go to the next pair. Okay, at the moment we're seeing strength coming in on those pairs. We saw strength on the pound Audi, or weakness, sorry, on the pound Audi with the strength of the Audi. We're seeing strength coming in on those two Audis. This goes to the Audi Swiss franc. And again, look, we'll do the same thing. It can become a bit boring and tedious, but once you've got it all set up, you don't need to keep doing it again. So we have a break of structure there. Another break of structure. We have a shift in structure there. What does that create? An area of supply. Okay, so we come back to supply. The market does drop down. Okay, we have another small break of structure there. It is a valid breakout. Then we break back higher. So the market's been a little choppy here, and then we break back lower. And then eventually you can see we break back higher. So if you're looking at the smaller swings here in the market, you can see we drop, pull back, we take out the area of supply, create demand, reverse. So you need to be looking at the area of demand here really at this point in time. This is the demand where price is coming into. Just may have missed that area. Or we're not actually, let's go close in. I don't think we're actually on the high of that candle. Where's the high? There's the high of the candle. There we go, to the pip again, we push into that demand and we push higher. So as we break that structure again, what does it create here? Well, we create a new area of demand, but price runs straight through. Why? Is because it's coming off this area of supply. So this is a very corrective price action here, not something that is very helpful. And yes, you will have losing trades, especially if you're looking to sell out of this area, okay? Or you was even looking to buy out of this area. But why would you be buying out of that area when you have this area of demand still below? That's what you have to take in consideration. So understanding, we removed this area, okay? Let me just grab my other tool. So we removed, grab that one. Okay, that's better. So we removed that area of demand. We removed this area of demand. And that's as price pushes up here. We even have a very small break of structure, okay? And let me just double check. We have a high of 705, a close, actually 705 and a close of, so no, it isn't a break of structure. So your main structure break is going to be here. So once we see that, we have a new area of supply that you can draw right here. Again, you can see you can either use the full, okay, buy to sell move, or you can look at just the last candle. It's up to you. So the continuation of price, we drop down, we break structure here. What does that create? A new supply. We drop down, we create a new swing low, and you can see price is pulling back towards testing this breakout point, filling this imbalance that could push price lower from here. And then we look to see, do we have a sweep? Well, we do have this low back here, but we don't sweep it. So this creates an area of demand that we're currently bouncing out of. So that's the Audi Swiss franc. Again, we are bearish, but we're bouncing up out of demand. Let's go to the next pair, and that is the Audi New Zealand. So now we're looking at the strength and weakness crossed with the Audi and the New Zealand. Which one of these is actually stronger? And again, we'll go through marking up all of our levels. So you can see we broke structure here. We broke out again. Every time we see that pullback breakout of structure, it's going to create a new area of demand. So we do have this small break there. I think I could use this as a reversal, and then you have a new breakout right there. And then basically prices drop down, creating a new low. So now we have this as our area of supply. Prices bounced out of the supply, broke structure again, new area of supply. Okay, we can mark out of that area of supply. And where was our demand zones? We had a demand zone you could have marked here, got removed. That area of supply removed this area of demand. Your next demand zone is this one here. Again, we just have got swept through. I'm not sure. Let's double check it. Yeah, looks like we just got swept through. So we swept the low of that demand into the imbalance below. That means the next demand zone you would have would be this zone down here. Okay, so that's where you've got movement yet to fall to that demand. So the AUD New Zealand, we can't really say what's in control. Yes, we have been stronger to the downside, so New Zealand has been a stronger currency of the two. But currently, since that wick we've seen across the board on the AUD, we're seeing some strength pulling back in. But as a supply and demand, we haven't really bounced off the area of demand. We wicked through the low of demand, and we've got a supply above to sell from. The next pair we're going to look at now is the New Zealand USD. Okay, so if you're still here watching, I really do appreciate that, because we've been doing this for some time now, and I hope you are enjoying this type of content. And like I said before, if you are, you want to see more of these types of videos, and perhaps we go through imbalances next time, then leave that comment below and let me know it's what you want to see. So again, let's go through this. We have a break of structure with mark here to downside. This would be the low, so the break would be just there. You have a sweep at the low. And again, most probably we're going to have a sweep here. Just had a sweep there as well. So then we have an area of supply you can mark here. Now you do have a drop-based drop zone as well. You have a drop-based drop-based drop. So you have another zone of supply with a drop-based drop. You have another zone you can mark there as well, where you can see prices holding and the supply has been in control. So we could just pull back to this zone and we could fall lower. What about areas of demand? Well, we look at this low. We swept this low as well, so there is our demand. So our demand is going to be this last area. And we don't quite reach that demand. If you've marked off the full candle, the swing, the high, not just the close, obviously we come into demand and we wick through this low. So demand is in control, okay, to the upside the moment after the sweep, and we're pushing back up against this order flow to downside, looking at these areas of supply for potential move lower. So that's the New Zealand US dollar. Let's look at the next pair in those, which is the New Zealand Japanese yen. Now look at the strength at the moment with the Japanese yen. Very, very strong push to downside there, showing some weakness on the New Zealand. The last break of structure we can mark is right there. This creates this area of supply. There's more of a drop-based drop supply as well, even though it is a break of structure. It's more of a drop-based drop. And if we look to the right, where do we have a low? There's your sweep. Remember, what are we sweeping into? Into demand. So if we mark out, this is our previous break of structure. And again, we'll zoom into price so you can see exactly what I'm looking at. So the market, okay, do we break this low? We did just break through that low. That means we had this as a high. We just broke through it. Then we pull back and then we broke through. So we have an area of demand that you can draw here. So mark this out as a demand. We'll send it to the right. And then we have another area of demand. Now you could draw it there, or you could draw the full sell to buy move. So If you went for the full sell to buy move, I believe you may have been pushed into demand. Otherwise, you wouldn't have been. Okay, so just to the pip. That's where you need to really consider whether you want to use the final candle or the full zone. Again, we can identify the market has bounced off that demand and you're pulling back towards supply. So look how easy this is. Too many traders out there overcomplicate this supply and demand. It's not that complicated. Now, we haven't even got into how you're looking to take a trade yet. We haven't even got into the use of structure correctly and the imbalances in the market and liquidity, the sweeps and everything. But just with supply and demand is a great way for you to take your trading further. So that is the New Zealand Japanese yen. Okay, potentially we could run lower again yet. We are very bearish. If we look at the next pair, that is going to be New Zealand Swiss franc. And again, that we can see the strength pushing lower of the Swiss franc and the weakness of the New Zealand. So New Zealand has been looking very weak until we have this push up. So again, let's go through how we quickly do this. We look at the structures. Okay, this is our last breakdown. And again, we have another break lower here. So our current supply is this era. What is price sitting in right now? We're sitting inside supply. Our previous zone, again, you could use this full buy to sell move here because this move is very indecision in this market. So that's an era of supply. Did we make a sweep? Well, can we go back far enough to find anything? Doesn't look like we will. So, hang on, let's go back. So let's look to the right. No, we can't go back any further in price, but we can identify that most probably we're coming out of an era of demand somewhere, but we're going with the flows. If we're looking to sell this market out of supply, you're just basically going to go with the structure. That means you'll be looking to take out the low. So any sells from here, look for the market to run the low. The continuation. This is a lower low in the market, lower high. We'll come back into a supply. Very, very simple to understand. We do have a bullish imbalance pushing through to the upside, which could hold price and we continue through this area. Now, if we see that, what we're going to create is what? A new demand down here. So the market could drop down into this area, push through, pull back into demand, and then continue up into the supply. So New Zealand Swiss franc, potential to run lower, yeah, but we need to see how it reacts, okay, this imbalance. But understanding supply and demand, we're sitting inside a supply. So let's now look at the next pair. That is the US dollar CAD. Okay, so any of you like to trade the CAD, Canadian dollar with the US dollar, this is your chance to see how I look at drawing out my zones. Very simple, okay? So let's look back here. We have a swing high. We don't break out until this level. So that would give me this as my area of demand. You can see price holds at this area of demand. We do have this area of demand here as well, which is like a rally-based rally, which breaks these highs. So you have this area of demand as well. And finally, you'd have this rally-based rally zone right here, where you can see price is currently bouncing from. So that's how you can look at the zones very quickly. Break a structure to the upside. Here, we pull back. We have another quick break of structure this high. What is that doing? It's showing us a shift in structure quickly. So now we have a new area of demand that you can mark right here has been removed. If demand got removed, it got removed by what? A new area of supply. So you have price reversing here, creating a new area of supply. Now, do we make a sweep? Well, there's a swing high. What is that? It's a sweep at a high. And we have here, let me zoom in, will be the area of supply that price is sweeping out of. So we just use that full candle and let's bring it over to the right. And you can see that we've gone deep into that supply and reversing out. Now, when we see a reversal out of a larger supply zone like this, creating a new supply, is an opportunity to look for the pullbacks to continue to sell that market. So you'll be looking for the strength here of the Canadian dollar and the weakness of the US dollar. So the last area of demand we've bounced off was this one, okay, to the upside. Now we do have a rally-based rally zone there where price may want to bounce from. Now it's not the area I'd look to trade from or anything, but it's an area you can look for price to come to, okay, to bounce off back to supply for a sell. That's the way we look at doing that with the markets. So that is the US dollar CAD. Let's look at the next pair in that sequence. We've got the US dollar Swiss franc. That's been very weak, the US dollar against the Swiss franc. You can see the moves down, the move up, and we can start to go lower. So we can see the last shift, we had a push up higher, and then we had a break of structure lower. And we can draw another breakout right there. So for an area of supply, we have this as the last area of supply. Market come back to. Okay, we have a origin zone of supply. You can mark up here. You can see where price has reacted at that supply, dropped down, pulled back into this area of supply, dropped down. We didn't quite get to that supply. When we dropped down, we came back into this area of supply. So what I mean is we have areas of supply which holds price as we go down. What does this show me? This shows me the current, okay, strength of supply that we're in control. Again, you could use the full, okay, buy to sell move there. Now looking down to the left, we're going to look for that sweep. Why? Because look at the big wick. Where is the sweep coming from? Well, that's a push through structure. What about this low? There's your sweep. Okay, you're always going to find a sweep when you see these sort of moves. And for a true reversal of structure pullback, this is our break of structure, which means this becomes my area of demand. Now you can either use that candle or this full zone there. Extend it to the right. And we can see we're out of the area of demand, so we're bouncing out of demand, pulling back towards the supply. So the US dollar Swiss franc has bounced off this area of demand, but then we're coming back to supply. We can look for another sell back lower. Now obviously we use the lower time frames to help assist us here. But understanding that the overall bias had been bearish, order flow is still bearish, we still look to go with the strength of the Swiss franc at the moment and the weakness, okay, of the US dollar. So that is the US dollar Swiss franc, marking up those zones. Let's now go over to the next pair, which is the US dollar Singapore dollar. Okay, not a pair many of you will look at trading. It's a very good pair to actually look at now. And again, we do the same thing. Looking for that break of structure. Quick and simple, okay? Break of structure equals what? We have an area of supply. We can use an area of supply we can mark out. Don't need that. Okay, so area of supply, where you look for price to pull back to is supply. We do have that drop-based drop zone here as well. So we have a drop-based drop area of supply, but this one looks much better zone. Looking to the left. Okay, we have a break of that low, but do we have a sweep of this low? Just about. We did have a sweep, but now the market's pushed through. So if we look at the market breaking out here to the upside, we have this is an area of demand where prices bounced off. Okay, so there's always going to be an area of demand or supply where price is coming from. So this is the reaction we've had. We're bearish order flow still. So what we're looking for really is the market to show potential pullback to area of imbalance or supply to run lower again. I'm just going to grab another drink. And this video has gone on for a really long time. So I'm getting quite hungry now. So we're going to get through the rest of these pairs. So I'm going to grab some lunch. And we're going to identify that we're looking for bullish move into potentially the imbalance or supply, okay, for another move lower. Now, we could see a higher low here for a run higher. So US dollar, Singapore dollar. Let's look at the next one, is the US dollar, Japanese yen. Again, we can see the strength of the Japanese yen. We've seen that across those other pairs. And we're going to start here. This is where we see a valid breakout. The market then makes this high. We may have a very small, I think we may have a very small breakout we can mark there. Here we have a swing high and a swing low. So that's a valid breakout where we can mark out. Now it's more of a rally-based rally zone of demand. Okay, you can see price holds at demand, pushes up, fails to break higher, and then reverse structure. So there's a break of structure, and we're going to create, and then we can just use this as an area of supply. We don't really need to use it from there, but we can go all the way up to there if we wish. So there is our supply zone, removal of that demand. So the previous demand, the low, is this one here. Okay, where did price react from? We reacted from the demand, moved sideways, and then broke through to leave this new area of supply. Remember, a supply is always going to remove an area of demand. If you remember this, okay, and with a demand always going to remove an area of supply, you're going to be so much better forward in your trading. So again, here we have a drop, we have a breakout. Again, here you have another breakout. So that you've got areas of supply that you can even mark here. Now you can even mark that full move. And then you've got another one here. You can even mark the full buy to sell move. We don't quite come back. I personally probably mark off that candle there like this. So you can see that supply is in control as we push lower. And then we've got this breakout you can mark there. And finally, we've got this swing low. So again, we look for that sweep. Do we sweep this low? That's our last low in the sequence. Yes, we do. And remember, we're always going to go through into an area of demand. And where did price push into? Into the demand zone. This is so simple. It really is. It's not overcomplicated to do this. Stop chasing your dreams of looking for the holy grail and you think the next person's going to teach you something new, some different strategy. Stop jumping from strategy to strategy. Start with supply and demand. Okay, watch this video a few times. It's going to help you to see the way I'm doing it, how quickly and easy it is for you to do too. Watch the playlists on the channel, the market structure, the imbalances, the supply and demand, okay, liquidity, everything. Watch those in the channel. And if you want to take it further with supply and demand, then check out the Profitable Trade Workshop. I tell you, you will not be disappointed. It's going to help you to progress further in your trading. Now, if you're still here right now, you are definitely one of the 1%. So put it down in the comments, 1%, because I like to know who are the 1% people watching this video, because you're going to go a long way in your trading still watching this. So right now, we're bouncing out of that area of demand, pulling back for supply. Okay, simple. That's all you're looking at. Okay, we have to bounce from an area of demand after a sweep. Always happens. So let's look at the next pair we're going to look at, and we're on 2 pairs left. Okay, we're going to look at the gold and silver, because I know many of you like gold and obviously silver as well. So quickly, what are we looking at? We had a sweep pair. So let's just start the smaller price action. Let me just look at what's happened here. We had a breakout here to the upside, pull back, swept. So this is a valid breakout. And just mark it off as a structural break. We have another valid breakout there. Then we have a break of structure there. Even the understanding of how you draw your structure breaks is critical, really. So you can see we break back up. Then we have another breakout here. We then have another shift back lower. So you can see how the price has been very choppy here. And another breakout there. Then we have another break of structure to the upside there. And you really want to be marking out all your structures before looking at those areas. Okay, I'm not going to mark any structure break there. There's a reason for that. I'm not going to get into it in this video. So the last break to downside, we broke up, pulled back, and this would be my low. So we haven't broken it, you see? So what does that mean? That means this is my last area of demand. So where's price been holding at? Price has been holding at demand. The demand below that, okay, really is this full candle. And you can see price has been holding that demand as well. Okay. We have some supply zones got removed in that, and then finally you have another demand zone you could mark out here. Again, demand has been in control. So we're just looking really now for price to run for this week high to run higher. So if we look to the left, why did price drop from here? Let's have a look. Can we go back? I don't think we can go back to anything on price here. We're very high up. So we're just going to continue looking for the run of high, putting back to new demand every time until we reverse that demand. When we start seeing price action like this, especially when we have this, okay, a sweep in the market, okay, the market has swept this high. Potentially, when we see a sweep and we start to fall back, the demand will fail. And you can see that the demand here failed straight away. Now, once it's failed, it does leave this new area of supply. Now, if you use the full buy to sell move here as a supply zone, I mean this buy to sell move, we come back into that zone and into the imbalance. If you fine tune it to that last candle, you wouldn't have got price come back there. But then you're trying to sell into demand. And that's something I don't suggest doing. Yes, we could look to sell up here, lower time frames down to this demand, and that's fine, but never do it on the higher time frames. So at the moment, just looking for that continuation to push through this week high to create a new demand. And if we do that, where's the demand going to be? This is going to be your new demand zone. Okay, simple. So we can bring that back here. This will be your new demand. Obviously going to be some rally-based rally zones there as well. So let's look at the final pair, okay, which is going to be silver. What do we see with silver? I do hope you're enjoying this so far. I know it's been a long video today, but sometimes this can help. We failed to run this high. And let's make that into a structure break. So that means we've got an area of demand in control, this area here. Okay, so we just bounced off of demand. Now we have internally some breaks of structure and some supply which has been holding price. But just looking at the main swings here, I don't think we can go back far enough. We may be able to. So we do have this high. Did we sweep that high? Yes, we did. So you can see how these small sweeps are crucial to reading price. And what's going to be above that sweep is an area of supply. So do we come into that supply? So we have this as the last main buy to sell move. And let's mark this out to the right. So yeah, you can see we would have gone into that supply if you're using the full basing area. If you're using just this candle, we probably wouldn't have seen price go into that supply. Spin back. Okay, so we may not even tested it there. So let's bring that across that sweep. So since then, the market's pulled back to a demand. I've been looking for continuation out of the demand to run back for this high. So you're looking for the market to shift, pull back to new areas of demand on a lower time frame. So that is how you can easily look at your supply and demand zones. Quickly find where price is bouncing from, where it's heading, which way it is in control. You know, is demand in control or supply in control? Just remember, okay, a supply will always remove a demand, and a demand will always remove a supply zone. And when you're seeing those sweeps happening at a swing high or low, it's going to be sweeping into a previous demand or supply as well. So like I said throughout this video, if you want to see more of these videos, then let me know in the comments about telling me. I'm not going to know if you're enjoying these videos. And I hope it's helped you today understanding the simple process of using supply and demand. And if you want to take it further, don't forget there's that profit trade workshop I mentioned throughout this video. I'll leave a link in a moment for you to go through and check that out. And I hope you enjoyed today's video. Catch you next time.